everyone. Welcome to the KE Report and another daily editorial. We're going to be focusing a lot more on the energy sector and now some of the nuances, or I guess reevaluation that some people might have in terms of just how much energy we are going to need on the back of the DeepSeek news, but then also taking a step back and understanding the big picture of energy growth and demand around the world. We are chatting with Matt Battiali, editor of the New Energy Investor, that is published under the Mangrove Investor brand, which we will link to in the show notes. Now, Matt, again, big picture, energy. I think everybody agrees we are using more and more energy. One of the recent real drivers behind that narrative is AI. It really reminds me over the last couple decades, really, of crypto mining. That was using more energy. We need more energy for that. Before that was simply the internet and Google searches. We need more energy for that. Recently, it is this AI trade and how much energy is needed for a simple AI search compared to a simple Google search. But then we had on the weekend and on Monday that news out of DeepSeek, that Chinese AI app, that said they're using cheaper hardware. They don't need as much energy for their searches. That's still such new news. But Matt, what does that mean to you when you're trying to project out energy demand?
Yeah, thanks for having me on again, guys. The response to it was really interesting because it was immediate. I think the NASDAQ ended the day down 3% or more than 3%. As we were talking a minute ago offline, a lot of the energy companies really got hammered. But I think that's a short-term response that has more to do with kind of where investors' emotions are right now than what's going to happen actually to power demand. The shorthand on the DeepSeek is that, yeah, it takes less energy to train that model. And so it's significantly more efficient than kind of the current iterations that are out there. But that isn't going to have any effect on what's being built currently because this is a Chinese model and they're not sharing their secrets yet. So, yeah, I think it was an overreaction. And I would put it on. I think it speaks more about how investors feel about where we are in the market today than about actual long-term energy demand. I think people are scared that this market's gone up and up and up for a long time, and they got 1 foot out the door already.
Well, and Matt, if you look at what happened yesterday to one of the largest utilities, Constellation Energy Corp, CEG, sold off by over 20%. It's down another 2 to 3% today. So people are acting like we're not going to need any electricity at all. But to the point we were also talking about off mic, a lot of the coal plants in the U.S. have been replaced with nat gas power plants, and the balance was being made up with solar or wind or expectations for that. With some of the new Trump initiatives coming in that really kind of push back on the renewables, where is that base load power going to come from if it doesn't come from something like nuclear power, which also tanked yesterday across the board? How are you looking at that dynamic?
Yeah, I think it was an overreaction, and I look at this as an opportunity. I mean, in the U.S. right now, we're building massive server farms in Virginia that are going to really hike up demand for power. And when you look at the kind of the supply and demand of electricity, coal power has fallen way off, and you're not going to replace coal power plants overnight. Those things take forever to plan and to permit, and you have to supply the fuels for it. What was being built were these kind of gas power plants that were much less complicated to build. We have lots of gas in the Northeast and in Texas, so it was a very simple and actually a more efficient way to generate power. So it's going to be more difficult. We built them as fast as we can, and they're not really baseload. They're more peak power. So really, it's nuclear power. That's really where this has to come from, especially now that the moratoriums on offshore wind farms, which we're poised to add significantly to the renewable energy spectrum, those are all gone. So, yeah, it's nuclear or bust.
Matt, one thing I think we need to consider too, especially when we're looking at some of these sell-offs, is that look, these stocks had been doing extremely well because you look at something like even the uranium ETF, URA, that with this big sell-off that we've seen, it's simply back to where it started the year with Constellation Energy. Constellation Energy was up over 50% just this month. It was a rocket ship higher. It's still up 20% just from the start of this year. So in 28 days. So these stocks, yes, they've pulled back from these highs. They've kind of crashed from these highs, but they were also screaming higher. So how do you balance out, again, the expectation of just how much more energy we needed and how much the market looks forward, and now taking a really reevaluation of these moves, but still understanding that some of these stock charts, you look at a longer term view, they're still at high levels.
Yeah. Yeah. I mean, I would have to sit down and look at them on a case by case basis. In some cases, you can justify that by revenues, but a 20% move in a day, yeah, there's froth there. Or there's
50% move in 2 weeks or in 3 weeks.
Yeah.
There's also froth on the other side.
Yeah. This is a crazy market. These are utilities. 50% up, 20% back in utilities is like, these are companies that typically have, single digit earnings margins, and they're just big old stoic, they pay their little dividends, and they deal with big conservative funds. This is very odd behavior for them, but it does speak to the kind of the nerves of the investor. Like I said, I really do think this has been a long bull market, and people have made a lot of money, and that there's a reason that stock market crash trends on Twitter like every day. But at the same time, we are in a transitional period in energy, and we haven't seen anything like this since we went from whale oil to kerosene. This is a huge deal. Coal was king, and electricity is the future. Like, we want more of it. Everything's electrified, every Barbie dolls, everything's electrified these days. Chainsaws and lawnmowers now, instead of, internal combustion engines, they're battery packs. It's crazy. So even with kind of the slowdown of electric vehicles in the US, I still think that electric consumption is going to be increased by AI. And the other thing about AI is no matter what system you're using, it consumes more energy. And so even with, oh gosh, I want to call it deep fake, but it's not deep fake.
DeepSeek.
Yeah, even with this new, more efficient version, you have something that is incredibly useful. So there are going to be people using it that have never used AI before. And when you do that, it is an order of magnitude more power consumptive than a Google search, right? So you may use less electricity, relatively speaking, but on the whole, you're going to consume more simply because of how useful this stuff is. And people are embracing it, that it's coming. I mean, when my dad started fooling around with Chat GPT and loving it, and he's in his 70s, I thought, oh, this is a phenomenon. It's coming. This is this version of Facebook, this iteration of Facebook.
Well, Matt, if you back up the clock, if we took a time machine back to 2023, before 2024 became the year of AI, we still needed more electricity then. And uranium and nuclear stocks were already running because they can see the writing on the wall. A lot of people were looking at nat gas plants because they could see the writing on the wall. So before AI ever became a big thing, even though it's been out for 20-some years, for some reason, last year, it captured investors' imagination and pushed a lot of these stocks up higher, including the nuclear sector and the uranium sector. But we already needed a lot more power to begin with, and I'm talking globally, not just in the U.S., but if you look at the global picture, the reactor builds that are just happening, regular nuclear power plants, we need a lot more uranium, and the uranium miners have been in a little bit of a funk. Now that this AI thing has kind of been a sucker punch to the sector, do you think people will eventually find equilibrium and say, hey, look, even without AI, we still need a lot more electricity. But to your point, even with a newer, more efficient AI, we're going to need even more power?
Yeah, I mean, I think that's the reality. It just has to it has to sink in past the fight or flight response that these kind of news articles tend to hit people with. But yeah, I've heard, a lot of my readers come back to me and say, well, they're taking away the electric vehicle tax break. So fewer electric vehicles means less power demand, right? And the answer to that is, well, kinda, but not really. If you're only talking about the US, we still have a pretty solid infrastructure of electric vehicles today. And yes, by removing the tax break, you're going to make them more expensive for folks, but you still have that's an additional demand on the infrastructure. But globally, the US EV market is only about 20% of the world, and most of the EV market is in China. So in terms of electric power demand, China has a massive EV rollout and this embrace of AI. So yeah, you're going to see global demand. That's the thing about uranium, is it's not just a U.S. or Canadian or North American demand. It's easy to send that stuff around the world, unlike oil or natural gas. And so to me, it's a global market, and the global demand for new power sources is on the rise. I say this all the time to my readers. This is not a short-term thing. This is a long-term trend. You want to get in. It's going to be choppy, but as they say, every bull market climbs a wall of worry, and this is part of that wall of worry right now.
And this is still very much looking like a bull market, too, for a lot of these different energy sectors. Look at how beat up they were 5, 10 years ago, especially, and just how much better these charts have done. So, look, investors have taken notice, and I think they do understand that we need more energy. One of the nuances, too, now with Trump in office is that he immediately signed an executive order that I think halted all of the wind and solar energy developments that the US was experiencing. And those have been some of the fastest growing energy suppliers. Now, Trump has been on record. We all kind of knew that he was going to do that. How important of a move do you think that was for the energy sector, and how sustainable do you think it's going to be for the US to now just all of a sudden turn its back on some of these other clean energy initiatives?
It'll be really interesting to see how this plays out. I mean, all the offshore stuff is now halted. Any plans to build on federal lands has been halted. So there's a lot of money that was invested that is basically going to be lit on fire and go to money heaven if they stay halted. But yeah, the interesting thing is that wind and solar really made up the gap between the decline of coal and the increase in natural gas, because we brought on natural gas as fast as we could bring it on, and it still didn't make up the gap with coal falling off. So, you have a couple of choices, one of which is higher energy prices. A lot of folks are pointing to this kind of the other mandate that's out there, which is this increase in U.S. domestic drilling for oil and gas. One of the things that everybody should know is that almost every oil well drilled in the U.S. produces natural gas. And so it's one of the reasons why natural gas prices tend to be low and go down during periods of high exploration, because every oil well that comes on brings on some gas and they have to plumb it in. So, I don't know how fast we can bring on that new natural gas capacity, or if that's even something that people are looking at. I imagine they'd have to. You're going to have to balance that with the expected income from the electricity. But if they don't bring it on, we're going to get higher prices, so we'll see. But that would be the only place. You have nuclear for base load. I expect more of that to come on. I expect that trend to stay. In the short term, without wind and solar, it's natural gas or higher prices. So we'll see.
Nobody likes higher prices, right? So let's see how this all plays out. And again, this is just a one-day movement in these charts, and a number of these charts had already been doing very well this year. So maybe a very good buying opportunity in this general bull market narrative. But hey, sometimes we do need to reevaluate some of our models. But look, no matter how you reevaluate your models, we do need more energy, and we need to figure out where we're going to get that energy from. And hey, nuclear continues to be, I think, top of the priority list for governments and a lot of investors looking at that, as well as that natural gas mix in. So we'll see. And I'm sure there's room for both to take charge of that continued build out. Hey, Matt, great chatting with you. Again, Matt Battiali, editor of the New Energy Investor, published under the Mangrove Investor. Click that link in the show notes to learn more about Matt's newsletter. Matt, great chatting with you. Have a great rest of your week.
Thanks, guys.